All right, we got the bounce that we were looking for, and it was a pretty decent sized bounce. Was it big enough to keep us going? Or are we going to Are we going to give some of this back tomorrow? I'm going to break down the technicals, what we've seen before, what to expect from this, heading into more earnings coming out this week. I'm also going to talk about how to trade earnings announcement with our trade idea on a very popular stock that has earnings coming up in the next week. So let's go ahead and get started. Today is Tuesday, October 16th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel. Click our logo right here. Then the red button, subscribe button will pop out. Click that red subscribe button. You'll get notified when we post these videos. Click the thumbs up icon that's right down below. That tells us that you want us to keep doing the videos day after day. It's an easy way to give us feedback. You can click that right now while you're watching. And comment, scroll down further and comment on anything that stands out to you from tonight's video. Join our daily Market Outlook email list. It has timestamps of what we talk about in our videos. It has a watch list of stocks that produce overbought or oversold market forecast clusters. There's a link popping out in the top right corner of your screen. Click that link to subscribe. Follow me on Twitter for more content like this throughout the day, throughout the week, and also join our Market Outlook community that we put together on Facebook. All right, let's start off taking a look at the S&P 500 with the market forecast, and you can see we bounced today and broke out above 2,800 again. 2,800 important level because that was a breakdown. So now getting back up above it so far is a positive sign. We'll see if there's some kind of return move tomorrow, not back down too. It's only 10 points away. You can see the ATR right now. The average range for the S&P is 32 points, so 10 points is nothing. You can see that the near-term line did rally, got above 50. Of course, now we look for where is that near-term line going to peak and how long does it stay above 50. Again, if we're going to be bullish, we need to get above 80 on the blue line, and the blue line needs to stay above 50 7 to 12 days. And ideally, if we can get an oversold cluster in that first 7 to 12 days, overbought cluster, like this one, so much the better. Unlikely because of how far down the intermediate line is, because it's got to get above 80 itself, which means it's probably unlikely that we'll get a solid intermediate run to come out of this. It's not impossible. If you go back, the comparison I've been using here lately is on that October 2010. If I were to come over here, let me get rid of the colors. So it doesn't shrink the chart here, and then zoom in. October 2014, right there. So, so this is when we had the Ebola scare. You had the multiple clusters. You had the big hammer pattern that we rallied out of and took off. Now you'll see here. There we go. You can see the near-term line did get above 80 immediately. We got the cluster within the first 7 to 12 days, and the intermediate line did turn up above 80. So I mean that was a big bounce, quick reaction to that, back up to 2075, back up to new highs for that point in time. So very well could get something like that occurring here, though the expectation would be something more like this, where you get a bounce up, some ups and lots of volatility, ups and downs, and then you get a pullback and bounce off of that and get going again. So we'll see if that ends up being the case again for here. But as of right now, watch that near-term line. Get it above 80, and let's see if it stays above there. See, over here, it didn't stay above 80 7 to 12 days. It got up there, but only came right back down within a few days. So we had a big jump up high, and then so that was kind of a sign that this intermediate line was probably not going to make it up above 80 without some volatility itself. You see the Dow Jones Industrial Average looks very similar, almost exactly the same as the S&P 500. The Nasdaq Composite, its blue line is a smidgen below 80, above 80, excuse me. I wouldn't necessarily say that that's a nice solid close up in there. And then finally the Russell 2000, you'll notice, was so oversold, and a big bounce back up here to some important some old support. It's going to act as some resistance, and we'll see what that near-term line does. The momentum line jumped up, almost getting to an extreme level, which would be above 90. So a good sign all around, positive bounces. Still got a strong bearish posture on the Russell. You still have a strong bearish posture on the NASDAQ, the Dow Jones, and the S&P 500. So strong bearish postures, but things are turning up, and now we'll see tomorrow if we were able to hold most of these gains today, if not add to them. That will help get that near-term line up where it needs to be to really say, okay, that's one thing we need to see for a new bullish intermediate trend to emerge out of this. All right, before we look at some other charts here, just a reminder, watching our blog here on watching our video on our blog, I remember you can discuss tonight's video in our forums through this link right above the video. And below the video, we look for likes on Twitter, on Facebook, and right here on our blog. The number of likes tell us that you want us to keep doing these videos. So you can, right now while you're watching, just come down here, click on that heart on tonight's Market Outlook tweet, click this image to take you to your Facebook page, and click on that like button. Also, one quick note, we had some technical issues with our website today, so our schedules changed a little bit. Today's class, which is supposed to be at 6 Eastern time on directional options, was I'm going to do it tomorrow night and keep everything else the same. So that class was rescheduled, and we'll do that tomorrow night in Brandon's slot for Strategy Lab, which is not going this week because he's out of town. This is what the bounce looks like on the weekly chart. So you can see it wasn't much of a bounce yet. We opened up 2 weeks ago. We opened up at 29.26, and then subsequently to this low, lost more than 200 points, down to 27.10. So we are back up to 28.10 now. So we've gained 100 points off of that low. And again, the MACD usually won't go straight down to zero. You'll have some ups and some downs as it gradually grinds its way towards zero. And that's usually when you get the breakdown after the MACD has been grinding towards zero. That's usually when you stay below the 200-day moving average. So we're not in that mode, and that's another reason why, again, the expectation, and as I mentioned before, there's your October 2014 test, the 200-day moving average, and a lot of comparisons here, a lot of comparisons to the November 16 bounce, a lot of these areas, and even this March 23rd, the week that ended with March 23rd, this week right here. A lot of the same comparisons to those bounces there are what we're seeing so far this past couple of weeks. Let's take a quick look at the 3 green arrow chart. Obviously, we're not. Remember, I mentioned before that the first week will the first green arrow will most likely come from the stochastics. We're way below the 30-day moving average. It's hard to stay that far down below it. And usually we won't go sideways down here. Usually we'll come up pretty sharply up back towards it, like we are right now. Also, you can see too, the MACD is also way below its moving average. So it's going to be a few days, even if we were to do nothing but bounce for that. And you can see even the MACD on the app on its own. Not only is it pretty far away from its moving average, which is what produces the green arrow, but for it to get back above zero, it's going to be a while. We are back up to the 8-day moving average. So another reason we might get, like a little bit of a pullback, a return move tomorrow as we kind of retest that line. You can see, we'll come up and we'll test it a little bit before breaking up and through it. And when we get up through it, you feel a lot better about things. But you can see even here, you get up, you test it, you come up and down against it before you break above it. Even here, you came back down, got back up above it, and stayed above it for a while. And so when you get that far away and you make a big move back to it, kind of the initial response a lot of times is to hold it at first and bounce off of it and get some ups and downs around it before you break through it and make your way back up a little bit more. So another reason to expect some short-term weakness, again, really short-term, like maybe even just intraday tomorrow, would be because we are approaching the halfway point of the 4-week range. So just like that, getting back up above, getting towards the halfway mark. But you'll find some resistance there. I wouldn't be surprised if we don't get back. This is the Hakinyashi Open here. I wouldn't be surprised if we don't get back up above that open this week, maybe next week, as that line will come down. But you can also see too that, so that's, we had a higher high, higher low today, closing at the high of the day. Very bullish there. If you take a look at the volume and the trading range today, a strong range, which you'll get on the bounces, that number will start to come down. The volume at 118 million. So, if you put that in comparison, almost 4 points is right there, a little bit above the average. 118 million is right in the middle. So those are typically days that aren't so bullish, right? They're only this high now because, and you can also see that's above 1% on the ATR. But there's this high now because we're coming up off these lows. Do not expect a lot of days like this to the upside. If we do keep going to the upside day after day after day after day, then expect the ranges to get a lot smaller. Again, for comparison, back to that October 2014 level over here, you can see we bounced up pretty sharply in a matter of 1, 2, 3 days. You can't really see it as well, but you get the idea here. Let's see if it'll let us get back. Yeah, you can't really see it as well right here, but you bounced up pretty well for a few days, and then it really slowed down. So that's typical when you're coming. See, we had a high ATR then too, above 1%, and the ATR and the volume was high, just like we're seeing now. So expect some ups, some pretty decent days as we bounce up, but then expect it to really come down and start pulling all three of these lines lower. Volatility is still high, still in the bearish range. Again, that's why we're not out of the woods yet in terms of bearishness. We're still above this neutral 90 to 95 area, right in that bearish sweet spot. Get back below 95%. Now we're maintaining the bullish move. But while we're still in this area, expect ups and downs. Whether it's intraday, whether we close down tomorrow, but I do expect some weakness coming out of this strength that we had today. Alright, so to summarize, we got a bounce like we've been looking for, right? Volatility is really high. You're going to get big ups and downs. Today was a big up day. I expect not to last too much longer. Of course, barring market reactions to earnings announcements and things over the next couple of days here. But with volatility as high as it is and other technical patterns, wouldn't be surprised if we don't follow through with today's big move to the upside with at least a small move to the downside. And again, even if it's just intraday, before maybe closing on a run towards the end. We'll see if that ends up happening. But we had a good bounce. It broke out of this little pennant to the upside. We're testing that 8-day moving average. After we do get a near-term pullback, right? We're near-term rallying, but once we do get that blue line to pull back, that's when we say, okay, either we're going to get a divergence, a near-term divergence, or a new bullish near-term low point that we can bounce off of, and now really establish that intermediate trend with getting that green line back up above 50. So what do you think about that? Do you disagree, or do you disagree with our conclusion here with today's market outlook? There's a link popping in the top right corner of your screen. Click that link up there and then hit either agree or disagree in that poll. And then, of course, if you click on disagree, scroll down to the bottom and let me know why, what you're seeing in the comment section below. All right, so now let's transition into what's driving the price action today. Of course, it was mainly oversold technical bounce. A lot of it fueled by earnings, positive reaction to earnings. But the reality is the things that that have rallied the most, IWM, growth stocks, emerging markets, S&P 500, mid caps, all of these were down the most, and they are rallying up. And you can see gold, which has been a top performer over the last couple of weeks, pulling back, and agricultural stocks, top performer over the last couple of weeks, underperforming. And all these, of course, all the income, and you can see dividend stocks underperforming, value stocks up 1.5%, but underperforming growth stocks. So not surprising. Again, just kind of a return to risk appetite, really nothing more than that. If you take a look at these asset classes on their 12 grid chart here, and you can see, I mean, all of them, all these different equities, alternative equities, real estate, you can see the bounce it's made, dividend stocks, preferreds not so much, MLPs, all of these were really beaten up and down here. And then there's your treasuries continuing to bounce up a little bit, but still on very bearish trends. Crude oil bouncing, the dollar bouncing up today, and agricultural, as you can see, sitting there at their 3-month highs, along with gold and crude oil close. So the dollar pulling back has really helped these areas. And today, a lot of these equity asset classes bouncing up and recovering. You can see from a foreign market perspective, Brazil continues to be a strong performer among these foreign markets. Let's see right here. Here we go. The strength in the foreign markets continues to be Brazil. Look at Brazil bouncing up sharply today, up 3.25%. India coming up off of some strong lows itself, but pretty much everybody. There's Italy coming up off lows. You see Germany up there, Japan, China, France, UK to a small, and Canada to a smaller extent. Russia bouncing up off of, so Russia and Brazil have the better looking charts. Everything coming up to some degree, with the S&P 500 outpacing most of these European and emerging markets outside of Italy, India, and Brazil. These two haven't been beaten up quite a bit, probably the most out of all of these. And then Brazil, which previously had been the beaten up poster child, and really continuing some relative strength here. It's got a long ways to go, just as a reminder here of what this chart looks like on a weekly chart. It's just barely getting up above that moving average and barely getting above these highs. If you look at it on a longer term view with the 50 and 200 day crossover, you can see getting above the 200-day moving average, and you still are almost there of getting that cross, that golden cross, where the 50 crosses back above the 200. Usually, remember, after you get that, you get a return move back down, and then you'll get an opportunity for a rotation and to continue to ride this higher if that ends up being the case. Which, again, if we are in the late cycle of the economic cycle, business cycle, and market cycles, you would expect commodities to do well, and Brazil is tied to commodity prices to a degree, so they tend to do well when commodity prices do well and the dollar drops. From a sector rotation standpoint, again, the biggest losers end up being your biggest winners. Materials still kind of lagging behind. That little bounce in the dollar there, keeping materials and energy down, and industrials to a degree. Staples, utilities also lagging behind. Falling, yields not really taking off is pressuring financials to a small degree too on a relative basis. Your biggest winners are the ones that we told you would lead any bounce. If we were to get a bounce, discretionary technology, communication services will most likely be the ones that led the way on the initial surge, probably that initial near-term run, but eventually give way back to the rotation, the sector rotation for this type of move. Again, if the dollar were to stay bearish, were to roll over, then it'd be materials and energy and industrials would lead during a bullish market with a falling dollar. Alright, for our trade idea, it's actually a concept I was going to teach in the directional option strategies class tonight. We'll take a look at it more tomorrow night in our rescheduled time. But the idea was to look at a calendar trade heading into an earnings announcement. Twitter has earnings coming up. I had a nice little breakout today, finally getting above the moving average here in between the Bollinger Bands, breaking up above some recent highs. You can see from a DMI perspective, excuse me, here, let's pull up Twitter on the chart here. There we go. Still don't have the crossover yet, but it's still, that's which is kind of interesting, kind of leads to the potential for one. when you get that crossover occurring below 25 like that, and then eventually the breakout up above it. We've seen that before, ADX coming down. Take a look at the market forecast. It'll show you a similar pattern to what we're seeing on the S&P 500, but its near-term line getting up above the reversal, the highest level it's gotten to since back here when it was also kind of busting out of this bearishness that we had, dark pink shading for quite a while. You take a look at the 3 green arrow chart. Let's look at the actual, this one, the 2-line version. You can see its MACD and stochastics are both rising above their moving averages, both close to crossing above their midpoints, with the price itself crossing above the 30-day moving average, and both lines close to crossing above the 30-day moving average, which you can see would be positive. Finally, last chart we'll take a look at is the 5200-day moving average. You can see, again, the week's not over yet. But so far you got a good start to the week, and the question will be if we're able to get above that. If we're going to be able to get above the moving average, you can see as of right now, and even last week, we got the upper and lower shadows with a small body. It's a good sign that will change the trend that we had from what was bearish to potentially bullish. So that being said, you do have earnings coming up, which gives you this phenomenon of having a much higher volatility in this week where the earnings is versus say back in the December options where the earnings is really light. And if you were to take a look at the implied volatility here, you can see it actually goes down. For the out of the money or in the money puts, it goes down. So you say, okay, well, if you look at that chart, go back to the Bollinger Band chart here. You can see that there's a strong concentration of volume right around this 32.5, 33 area. So if we were to say, you know what if we were to sell a put, this really expensive put at 33, you can see it's got a lot of extrinsic value here, about 95 cents of extrinsic value, and all the intrinsic value that has left above. You can see the intrinsic value, $2.90. So you know you're going to make that 95 cents when this option expires worthless, and if the stock does rally up above 33, then you'll make $2.90 as well on that, with all of this dropping down to zero eventually. Well, the extrinsic value dropping down to zero, but if this goes out of the money, we get above 33, then this will go 290. Everything will be zero. The intrinsic and the extrinsic will be zero. The question then becomes, how much will we lose here? Right now you can see its extrinsic value would go down a little bit, and the intrinsic would also go to zero here. And so that's where you get this chart, right? This is your profit and loss. If we were to rally, depends on how far up we rally, our maximum gain, if we get to 33 by the end of next week, or close around there, you get a couple $100 gain for a $75 risk. Then if the stock does drop and kind of have a bad earnings announcement, comes below these lows down towards 25, then we already know that the most I can lose is $75. And for me to make $75 on the other side, you can see I can go a little bit past that 200 up to 36, 35, 37 area and still make as much as what I'm willing to risk on a per contract basis. So and if volatility does really drop off in that front month, which is where it's really, really high. So if the volatility were to drop, say, what is it now, about a 40-point difference. So let's just say volatility drops 30 points in that front month. Not the overall volatility. You got to do the more parameters and then adjust this one down about 30 points. Then you can see you get that's where you get most of the gain, is from that volatility really dropping, and the extrinsic value here dropping all the way to zero, with the stock having the potential to move up higher and adding to some of your reward and getting into this area, that 100 plus gain up to 200 gain if we close around 33 by the time all is said and done. All right, now I want to hear from you. I want to hear your thoughts, questions, comments that you have about what was discussed in tonight's market outlook or anything I did not discuss. Make sure you post in the forums. There's that link popping out in the top right corner of your screen. Make sure you use that. You can also comment down below. If you're not subscribed to our site, remember you can subscribe to Market Scholars for free. As always, remember you subscribe to our YouTube channel. Click that thumbs up icon to tell us you want us to keep doing them. Comment on the video. Follow me on Twitter for more content like this. Join our community on Facebook as well as on MarketScholars.com. Thank you very much for your patience tonight with technical issues on our site. Apparently technical issues across YouTube and YouTube TV. Not a good thing on opening night on the NBA. But thank you for your patience and for watching, and we'll see you all tomorrow.